The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, if you have any questions, it's 877-927-6648. And I thought I would start the last show of the year by putting in the Bradley model the way that I see it. I believe that it's been inverted since we had the solar eclipse and new moon back on the 14th, 15th of November. We had a big full moon last Friday, and that full moon was also a blue moon. A blue moon is a moon that has two full moons in the same month. That happens every 18 to 24 months. And the reason why it's different is because, these planets move elliptically, just like through the Fibonacci spiral. All the planets move in the Fibonacci spiral of, the 618 and 786 and all of those. So that's the reason why the moons are they're called blue moon, because it is two full moons in the same month, and that's what happened on the 28th. And it was incredibly bright. If you happen to look up in the sky, whether it has any significance as far as a trading thing, I've never actually looked at blue moons. I've looked at all the full moons and new moons, but to actually go and look at the blue moons, one time I did this many years ago, and I didn't see anything that was, really exciting as far as any differences, that I could see. So I did post the Bradley, and, the Bradley model is a cycle model. It's based on the planets that we have out there. Each one of them is weighted. They're based on whether it's a positive or negative valence, in other words, whether it has positive or negative energy. It's the best thing that I've seen for predicting the stock market. However, it's far from perfect, and it does invert at times, but when it is working, it works pretty well, and right now it looks like it's working. What it's suggesting now is we're going to be down into around the 21st of January, and we'll have a little rally up into February 4th, and that'll be a real key one, to take a look at. So we'll see if that's the case. Now, I wanted to start the show with what I think is something that is extremely important. Basil talked about it just a little bit on his show, which he always does because it's one of his $3. It's the VIX, and it's a chart of showing the interest rate market versus the VIX index, which is the volatility index, and it shows this huge divergence that we have now over the past year or so. And this is an outlier event, folks. It's going to be something that I think would be incredibly interesting to watch. In fact, if I had to put on one trade for the whole year, what I would do would be to short the interest rates and buy the VIX and watch this index come together. And the problem is you need double margins on both because they're not related as such. So you'll have to take an extra risk. But I'm not recommending that as a trade. That's a professional's trade, and I certainly don't want to do that. That's something that could be very, very costly, because if we do have one more flight to quality, these bonds could easily go to 160, and that would be the place where I'd like to take a look at it. But right now, on a long-term basis, just looking at that VIX and interest rate chart, that tells you that something really, really dramatic is out there. That not many people are alluding to this particular chart, but to me, it means a great deal. Now, there is one trade that I see coming up. I'm not sure if it's going to be the trade that I think it's going to be, because it's going to have a lot of things going for it when it finally does work. But I'll put this up into Tiger TV here so you can take a look at it. I'm unfortunately that the chart is going to be a little smaller than you would ordinarily see, but the problem is that that's the only way I can get it done right now. And so what I'm going to do is I'm going to post into Tiger TV the chart of the long-term Treasury bond. That's the 30-year bond. And what we're going to be looking at here is a chart that is just about as perfectly symmetrical as you're going to see. In other words, from high to high, from shoulder to head, is perfect in the number of days, and from head to shoulder, that comes in on January 4th, on Friday. And what we would like to see, if it were a perfect head and shoulders pattern, is for the market to be somewhere between this 149 level and the 150 level. That would be the ideal head and shoulders pattern if it were to complete. Now, a head and shoulders pattern, if you'll recall in Dr. Lowe's book, the non-random walk down Wall Street that he published in early 2002, 2003, I believe, he listed all of these different patterns and had 700 pages of very, very exotic statistical and mathematical formulas, verifying that these patterns, not only were they predictable, but they did repeat with a great deal of repetition so that they could be used as a trading approach. And that's what the whole book was about. And one of his favorite patterns is one of the ones that all technicians use, and that's the head and shoulders pattern. And the key to the head and shoulders pattern, from my perspective, is that the shoulder and head, the time between the heads and the shoulders should be equal. In other words, when you see someone walking down the street, you don't want to see, their shoulder 6 inches farther on the left side than the right side. Well, it's the same thing with looking at a technical chart. You like to see the head in the very middle, the right shoulder symmetrical to the left shoulder, and that's what we'd like to be seeing. And if this is correct, then next week, or coming this Friday, we want to be watching, what these bonds are going to be doing at that point. That's what my strategy is. Now, I know we've got the fiscal cliff and the debt ceiling and all this other stuff. Folks, we have that all the time. I mean, if they do an agreement, it's just going to be, a bumper sticker. It's not going to mean very much. It's, it's going to have some really teeth in this thing in order to get these things turned around. We have to raise taxes for most everybody, except maybe the people making less than $30,000-$40,000 a year and those on Social Security. But everybody else needs to pay it a little bit more, and especially the rich. I mean, God darn, you can only buy so many Bentleys. You can only eat out so many nights a week. So they have to come in and pay the pauper. I mean, do you realize that Warren Buffett's secretary pays more taxes than he does? I mean, that's not fair. And corporations, they don't pay anything hardly. I don't think GE's paid taxes in years, and they should pay their fair share of the tax. I'm a believer in the flat tax. I believe we should have a sales tax on everything, and that way that no matter if you're making money and you spend it, you pay a tax on it. That's how I feel, but unfortunately, I'm never going to be running for office, which is really a good thing for all of us. Okay, let's go back to the Treasury bonds here a little bit. Now, the theory behind this head and shoulders pattern is the fact that it doesn't have to go into new high ground here to get a sell signal. So it's really important, this pattern, because it's going to be a perfectly symmetrical one come in on January 4th. Now, if the market collapses from here, let's say the Treasury bond market just breaks down from here and goes below that 145 level, then that's going to change this whole pattern. But right now, nothing has changed. The market is setting up. We're right in the midst of this negotiations that they have going on. And frankly, if they don't bring out something that's a big surprise, I would really be surprised, because they want the people think that they're working in the right direction and stuff. But I really don't think what they're going to do is going to mean very much just by increasing people that are making over $250,000 a year. And frankly, folks, the difference between $250,000 and $1 million on the amount of taxes percentage that you pay is not that much. And the people that make that kind of money should pay a little bit more, in my opinion. I'm not for suggesting everybody getting free goods and all the entitlements and stuff like that, but we've got ourselves in a situation where we've been overspending. We've talked about this before. Last Thursday, I talked about the problem. Was the fact that our gross domestic product has not kept up with the amount of money we've been borrowing. It's just like if you were trying to run your household on credit cards. It doesn't work for them. It doesn't work for us. So that's the problem that we reach. The real kicker in here is that if interest rates start to rise, it's going to put a big wrench in the Federal Reserve's ideas, because they're going to be stuck with a bunch of paper that they have to pay higher interest rates on, and that could be, the black swan that that is out there. Now, what could cause interest rates, to make that type of a move? I'm not sure. It could be that the dollar starts to collapse. It could be that China wants to no longer buy our Treasury bonds. I don't know what it could be. All I'm saying is it could be something. If we go back just a few months, if you remember when the euro was down at around the 120 level, and the whole world was bearish the euro, and the dollar was trading up at 85, and it was making a three drive to a top pattern, and it looked like Europe was going to melt down and everything, and all of a sudden things changed, and here we have the euro trading up in the 133 level, and that's what makes it interesting now is the fact that just because this news is out here doesn't mean that's the way that it is going to go. The news, follows the trend. That's the basis of what technical analysis it is, and that's what we're trying to do. All pattern recognition, folks, is just a way of examining the total number of buyers and sellers that are in the market and how they're reacting to it. Now, the reason why I don't use any indicators like MACDs or things like that, that's the main thing I'm really looking at. We've got a call from someone about Apple, and I'll be happy to. Are you there, sir?
Yeah, I'm here.
Lou, how are you?
Good. Happy New Year.
Happy New Year to you.
Yeah, I just wondering if you could tell me where you think Apple is headed. Are we going to?
Well, I've been very bearish Apple for quite some time, and I still believe we're going to go to the just under $400 a share. Today we're having a little bit of a relief rally. All I can say is, Al, that if we get, I will post the Apple chart into the Tiger TV when we come into the break, and you'll be able to see it because it shows a huge ABCD pattern. We've had some pretty good support here at $500 a share now for several weeks, and we need to get the price of Apple above about $580 a share for me to change my mind. And right now, I think we're trading at $522 or $523 and change. So that's what I'm looking at. But I still think Apple looks like it really wants to go to $400 a share. $394 is the exact number, but the reason for that is the BC swing of the ABCD Thunderbolt stopped exactly at the 382. It took 2 weeks to get there. It couldn't get through with even very, very bullish news, and then broke, another $70, $80 to touch the $500 level, and we touched it 505 last week. And today, this is just not more than a short covering, low volume rally, in my opinion.
Okay.
Does that help?
Yes, it does. Well, thank you.
Hey, and Happy New Year to you, and may God bless.
Likewise.
You bet. 877-927-6648, everyone.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. you take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and we did post the chart for Apple into our Tiger TV, so you'll be able to take a look at it. And you'll see where the ABCD measures down to that 1594 level. Now, I also posted into Tiger TV the VIX index, because the VIX index made a 61% retracement on Friday up at that 123 level. A few weeks ago, no one ever thought that it would get above 17. And, of course, now we've hit the 61% retracement, and we'll be able to see the thing to work. Now, evidently, I had a little problem with the Apple chart, so if you'll give me 1 second here, I will redo the Apple chart. It only takes a second because I have it in the format ready to go in, so all I need to do is to make a small change here, and fortunately, when you're Italian, you have a hard time to walk and chew gum at the same time, but this time we'll be able to do it without too much trouble, and we'll put the Apple chart in there, and I think we'll be okay now. That should do it. We'll get back to the VIX index, because we had an interesting thing happen in the market on Friday. You remember it was a very slow day, being Christmas Eve, and I believe it was a Christmas Eve. I don't even remember. All I remember was a very slow day on Friday, and the market, sold off dramatically in the S&P 500. The futures went all the way down and made the 61% retracement off of the November 15th low. In other words, it went from the November 15th low way up into December, and then on Friday it came all the way down to 1482. We made that on the close. The market closed around 1486. And then, of course, today we've had the strong short covering rally, that we're getting, as the market, moves on right now. But I did want to post that chart for excuse me one second, I have to do two things at once, and believe me, it's not an easy task when you're an Italian, is to try to find these darn things in a matter of a heartbeat, that you can keep your mouth working with your fingers, and it makes it a little harder to do. So I'm going to have to ask you to bear with me for just a second, and then I will be ready. I'm almost there. Okay, I'm in the right ballpark. All I need to do now is to find the spot where we are, and then we should be okay. Give me 1 second, and we'll be all right here, I think. Well, it's going to take more than 1 second. I think it's the very first chart because it was that important. Yep, it was. Okay. Excuse me, that was the second one. Darn it. Making a fool of myself here, folks, but that's my right, so hold on. It's easy to do. Hold on, and we will. I'm going to put the NASDAQ one in and then try to find the other one after the break because I don't want to waste any more time. But you'll notice that the NASDAQ has been the weakest of all of these markets. We only made a 50% retracement on the way back during the the rally that we had from November to December. But what I was trying to show here, the NASDAQ just missed the 61% retracement by just a heartbeat, whereas the S&P made it exactly in the futures. In other words, from the low that it made down on November the 14th to the high we made on December the 17th, we came down for those 2 weeks, and we made the 61% retracement. Now, the futures went down to the exact number, whereas the cash, because it was not open long enough, did not go down enough to actually to see what happened there. So that's what we're looking at, and we'll have to figure out why it worked that way. Okay, now the next thing I wanted to cover was the fact that the dollar index has held this 79 level so many times now over the past few weeks, and we really need for that to hold, for this market in the currency markets to hold up. Now we're going to be coming into our half-hour break, and when we get back to that, I wanted to bring something up and give you an idea on the Australian dollar and how it relates to how it relates to the VIX index. It's really an interesting correlation. And also, we want to be able to. We've got another caller about Apple. Max, are you there?
Yes, Larry. I've got a quick question. When you're talking about the target for Apple being about 390, are we talking about 3 months, 6 months, a year, 2 years? I'm trying to learn the ABCs and everything, and the thing that I don't fully understand is the timing. I mean, I can see the retracements and everything, so I'm wondering how long am I looking at for the 390?
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, I hope you can hear me now. It's my end. It's not it's not TFNN. Max, are you still there? Max in Houston had a question about Apple. Are you still there?
Yes, I am.
Go ahead. Fire away, my friend. I can hear you all right. Tell me, what can I help you with?
Okay. Well, I was listening to your commentary on Apple, and I understand everything. My question is, what time frame are we looking for the drop from the C to D leg? Are we looking? Is it like 3 months, 6 months, a year, a month?
Well, if you take just look at the chart, if you go into TFNN, I will do this as we walk through, is if you look at the perfect ABCD, if the AB leg in time is the same as the CD leg, this should come in late January, early February. That's why that if it gets below $500 a share, that would really kick in that ABCD pattern. and that would come in right around the end of the year, or end of the month, in January 28th. Is the date that I have on the chart. And all I'm doing is I'm looking at the number of days down in the AB leg, which were 6 weeks, and then the CD leg would also be 6 weeks from December the 10th into January the 28th, and that's how you would get a perfect relationship of time and price. Does that make sense?
Yes, it's perfect. Thank you very much. Really appreciate it. And you have
I don't know if I'm still on the air or not. It's very difficult to understand very difficult to see if I'm on the air or not. I guess I still am. Anyway, I hope you still hear me, Max, but that's what it looks like to me, is that if it is correct, the January 28th level would be down around the level of the 28th of January. That's what it would be looking at. That would be no different than if you went back and looked at the high that we made from May through July, and then the low from July into August. It made the same type of a move up. So this is the time and price and the symmetry that we see all the time. That's why when I talk about these patterns and ratios, I always refer to the ratios first and then the patterns. And remember, time is the most elusive of all the things that we have in the market. There's no question about that. So, just remember that. I hope you can hear me, Max, but that's what I think, is we'll look for a pattern around January 28th. And remember, if Apple happens to get above 580 a share, in other words, if it reacts more than 786 from the high in December to the low in mid-December, then that would tell me maybe the trend has changed and it's not going to get any lower than this 505 level. But right now it has done nothing, to change my mind. I mean, this is just a rally, and I don't see anything different than that. That's all I can say. I hope that answers your question. We'll see whether we can do it. Now, I also posted into Tiger TV the Dow Jones Utilities chart. And it basically showed the fact that it could only make a 38% retracement of the shorter-term high, and it only made a 50% retracement of the longer-term high. And so this is telling us that utilities are under a great deal of pressure. Are you kidding me? Gosh darn. I quit. They can still hear me. My phone is beeping. I'm sorry, folks. I'm on my laptop at my kid's house, and they're not high tech. They use cell phones. They don't use a landline. So please bear with me here. And when these things make a beeping sound, it scares me. Fortunately, I'm not using any of my Italian vocabulary that I can use sometimes and drives my kids crazy, but this time I didn't do it. Anyway, we want to be watching the utilities, the fact that it's been very, very weak, and that's one of the things that we've been keeping an eye on also. Now, there's one other one that I think is very important, and I'm going to skim down to it because we have been talking about this for quite some time, and I want to get it to this level, and that is the Muni Bond, fund, if I can find it. And let's just switch to gold, because gold is such a commodity that we're looking at. We'll do crude oil first, because that's the one that popped up, and that's what we'll do first, because crude oil is at a really critical level here, and we are at a level of this 91 and change, where it should have a little bit of difficulty. We have a caller from San Francisco. Edwin, are you there?
Yes, I'm Larry. How are you?
I hear you fine. What can I help you with, my friend?
Hey, Larry, two things, if I could get your opinion. One is on the wheat future. It made a 618 retracement, and I'm just curious what your thoughts are on the direction of that. And if you have time, I'm also looking at the platinum future.
Platinum?
Yes.
Okay, I can do both of those. What we'll do is we'll do the wheat futures first, because I watch those on a daily basis, because I think the best way to really take a look at wheat Edwin, is to look at it on a longer term time frame. And what I will do is I'll put this up over the last it's almost about the last 8 months, which should be enough. And you'll see that wheat has come down, and we've stopped at the 50% retracement. We talked about this on the commodity show last Thursday, down at this 775 level. We did make an ABCD pattern down at the 806 level, but we got no rally at all, and that told us that we were probably going to come down to the 50% level. And what I'm watching for now is to see if this level is going to hold. Now, it's held for 3 days, but that's not very much considering the holidays. But so far, the 50% level is held. This is the same thing that we have happening in corn. Corn at that 691 level was doing pretty much the same thing. So both of those, look very, very similar. Does that help?
It's very helpful, yes.
Okay. Now, if you'll give me a second, I'll pull up the platinum chart. I don't trade platinum; it's too thin. I watch it because of the relationship with gold, but I haven't traded platinum in many, many years. The volume has dropped off quite a bit. It's traded by some large hedge funds and things like that, and it's been under a great deal of pressure, compared to the gold market and stuff. So, if you'll give me 1 second here, we are. I'm in a different color mode than I like to be. But we're setting exactly at a 61% retracement now in the platinum market. If you wanted to buy platinum, this is the place to buy it. It literally has held the level that it should have at this 15, 18 level, and that's pretty much what you see. If you look at the chart really closely in Tiger TV, you'll see a blue overlaid line. And that line is the relationship of gold to platinum, because I do watch that relationship because it's hard for them, to go in different directions. But platinum has been much weaker. It's made the 61% retracement, whereas gold could barely make a 50% retracement. So gold is, far, far stronger, than the market.
That's very helpful. Yeah, I saw what you described on the platinum chart. Because of the lower volume, do you advise against trading platinum?
Yes, sir, 100%. I would trade gold first, and then silver if you had to. But gold is very easy to trade. It is 6 times the volume of the gold is 6 times the volume of the silver in volatility and everything. But now, if you wanted to be an investor in platinum and you wanted to buy some platinum just to, say you own some, buying it around this where it is right now, 1527, you don't have to risk more than, $1,000 a contract, because if it goes below, 1517 again after we hit that 618 retracement twice, I would think you would be wrong, but so far it's setting right at that level. So you might want to watch that, because, you could get an easy 10% move in that stock, and you're only risking, 1%. So that's a 10-to-1, risk-reward ratio if you wanted to invest in it. That's not something you want to buy one day and sell the next. You want to be in this thing for, probably 2 or 3 months if you're going to do it, and it holds this level.
Yeah. All right, very helpful. Thank you very much, Larry. And
you're welcome. Edwin, there's one other thing that I should be able to help you with, but unfortunately ETFs are not my forte. But there's so many ETFs, there might even be an ETF for platinum. I'll ask the folks in the room, and we'll see if they'll tell us if there is an ETF for platinum, and I'll bring it up on the radio. I doubt if there is, because it is it's a precious metal and also an industrial metal. But it just doesn't have the production. By golly, we've got a winner. Someone wins a new Ferrari. The ETF for platinum is PPLT, Edwin. So you might want to take a look at that. P is in Paul, L is in Larry, and T is in Tom. PPLT. That would be the ETF for it. And there'd probably be a whole lot less risk and a whole lot less leverage. But the risk is what you want to control, so I would probably take a look at that as opposed to doing the platinum futures.
Thank you, Larry.
Yeah, and also I would double-check the PPLT. I'm not sure of the person in the room that did this, but he came up so fast he must have known what he was doing. But I don't want to put any responsibility on him. It's my responsibility to give this information out. So I would tell you to double check PPLT just to make sure that it is the ETF for platinum, and make sure that it's got some volume. I had 3 people already tell me that it's correct, so you can pretty much say as it that it is correct. So just check the volume and make sure that's all right, and you should be okay. Frankly, if it's around here at this price, why can't we do it? We can just do this, and we'll take a look at this right now. We'll just look at PPLT. I'll put it into the, you've been so kind to call in, PPLT. And this is the last time I'm going to do this year, though. I will tell you that. Actually, it trades pretty well. It's, it looks pretty good. Let me put the volume in, and we'll see if we can, oh, boy, the volume is very small, but enough to trade. It trades in the 100,000, looks like around the 50,000 range. I'll put that in, but it's right at the 61% retracement. It looks exactly like platinum. And, it's right here right now, so it's 50.77. You don't have to risk more than a couple dollars at that point. Thank you, Sharpshooter, for bringing this into our, attention, because PPLT is the ETF for platinum, and it's trading at 50.91. The low last week was 148.77, so that would be your risk. And from that point, I would suggest you put a stop below that.
Oh, that's very helpful. Thank you.
Yeah, well, it worked out all right. I mean, fortunately, we got people. That's a real advantage of folks that we listen here in TFNN, is because we have so many smart people in the Tiger Den and also in Tiger TV, and they give us a whole lot of information. I mean, you've got so many smart heads out there. It makes it a lot easier for us to do this, and it's one of the reasons why I enjoy it, because I learn something every time I do one of these shows. Unfortunately, I'm technically challenged, so it makes me a little difficult to catch up with some of these technical things that are occurring. But it's pretty much what's happening. As we're speaking right now, we're having a pretty big move now in the stock market and also the gold market. I don't know if it's related to what's happening with the fiscal cliff or whatever. I have no idea, because I have no access to news. I really don't. I'm just watching the prices of looking at. Someone asked the question about the stop for the platinum and the PPLT. The low last week came in at 48.77. We're $2 higher than that right now. So your stop would be just below 48.77. I'd put it around 48.37, 48.47. So you're risking around $2 at that point. We're going to take a little break here now. Wow, I can't believe we're coming to the end of the year. Take a little break, 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, I'm going to post into Tiger TV the chart of the E-mini S&P because Friday we came down very strong at the close. We went all the way down to 1382.50. 61% retracement came in at 1382. So we did complete that. We've had a big reversal so far today. We have not taken out Friday's high yet, but there still should be some resistance at 1425 is what I'm looking at on a longer term basis. Now, the other thing that we have to pay very close attention to. We're talking about the bond market quite a bit, and I've been watching the muni bond market for quite some time now, and because I believe this is one of these markets that has a potential for a huge double top, and if you have a chance to take a look at the newsletter, you're going to you'll see that we've made a big double top in the muni bonds from way back in January and then again in December. And we've gone below the 61% retracement. We're down just a little bit today, but it's also telling us that the interest rates, looks like they want to move higher. Now, I want to mention one other thing about the talks that are going on, in Washington. Folks, this is a giant game that they play. If you don't know that, you shouldn't be in this business. But the Bloomberg, CNBC, they're all vulnerable to this. They all like to spread rumors and say something's going to happen because this is what brings people to listen to the news, and it gives them an idea of why things could happen or why they couldn't happen. But the final judgment is in the price of whether things go up or down. That's basically, what's happening, and that's what we're looking at. Now, as we're talking right now, crude oil is tagging the 150, or excuse me, the 91.55 per barrel level. That means that it's kicking out those highs. I really need to put that chart up. I hope I have time to do it. If you don't get a chance to see this in Tiger TV, try to get take a look at it on the newsletter, because it has really got some really beautiful symmetry in the ABCD that we have going on in crude oil right now. So unless crude oil really goes crazy to the upside here, we are at a very, very good place, to take a look at the short side of crude oil. That's the main thing that we're looking at. Now, in defense of all the politicians, I know they got a really tough job of, spending our money and stuff like this. There are a few of them out there that are trying to do the best they can, but there's a lot of them that don't have our interests at heart. There's nothing we can do about it. They got elected. That's all I can tell you. Someone asked me why I like the crude oil short. There's several things that make it interesting. The ABCD leg is perfect, just like we were looking at for the potential in bonds. The CD leg comes in today. The price level we were looking at was 91.52. It's trading right now 91.45. The high's been 91.57. You don't have to risk more than $500 in a contract that's worth $91,400. And so that's a very, very low risk trade in my opinion. As far as the Japanese yen trade that we're looking at, we're still making that 1.27 expansion at 96.20. Let me see. It's 96.60 is the 1.27 expansion. We've been just a little bit higher than that today. This is the last day of the year, so there's not going to be anything happening very much because it's very light volume. Tomorrow's a holiday. I want to take this time to wish every one of you a wonderful new year, and we made it through 2012. The Mayans didn't get us. So far, fiscal cliff haven't got us. Maybe the debt will get us. I don't know, but we'll see what happens. But anyway, please, try to help someone that has a lot less than you. That's about all I can tell you to do. Live every day in an attitude of gratitude, and may God bless each and every one of us, and especially Tom O'Brien and his family, folks, for what he does. Tom works his tail off for us. And
let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.